All right, so we're back to the business of the refineries. And now the NNPC, that's the State Oil Corporation, says two companies have been selected to build what you call a co-location refineries in Port Harcourt. The first co-location refinery will produce 100,000 barrels per day. And in Warri, the second co-location refinery will be 117,000 barrels per day. Now, this is a story you need to listen to very quickly before the fireworks get started on what is happening here. This is building fresh refineries that will share the same facilities with the existing facilities in Warri, Kaduna, and Port Harcourt. What a co-location refineries means, it's going to be a smaller refineries built within or just adjacent to the existing federal government refineries. So it's going to be a greenfield project, which the new investors will build on their own with their own money. That's what the NNPC says. But they will share facilities. In particular, perhaps they will use the same pipelines to bring in crude from the onshore, offshore, that will feed. That's what's called a co-location and sharing of facilities. This is what the NNPC wants to achieve. Basically, the three government refineries, two in Port Harcourt and one in Warri, will together, when they run at full operation, will deliver about 50% of Nigeria's total daily petrol consumption, estimated at 41 million liters per day. Then Dangote Refinery, that's situated in Lagos, that's the big boy in the refinery business. When it comes on stream, the schedule was 2019. She'll deliver 95%. So if you do a simple math of adding 95% with a 50%, you're coming to about something above 100%, much in excess. And that Nigerian government then believes that by 2019, with this arrangement of a co-location, getting the existing refineries of the government to work with Aliko Dangote on the other hand, Nigeria should be a net exporter of petrol products by the year, technically speaking, 2020. That's how it's going to work. That's the plan. Don't forget the co-location refineries, the three existing refineries of the government to be rehabilitated within the next 24 months. 24 months from today will take us to sometime in 2019. And if everything go according to plan, and Aliko was able to deliver his own refinery in Lagos by 2019, Nigeria should be a net exporter of petrol products. That's the plan, and that is how it looks like on paper. Okay, let's get into the markets, and that's one business that we love to talk about here on the program. The stock market, after a brutal and brutish 3 trading sessions this week, we lost about $500 billion naira between Monday and Wednesday. The market soft landed on Thursday by 0.5%. We crawled our way back, to 36,316.58 when the closing gong was done. And the market cap was a little bit healthier to 12.517 billion, or trillion, I beg your pardon. The market was seeing 14 trillion. We've lost close to 2 trillion in the last couple of weeks. And then you have the key data there for the transaction day, where Thursday volume was, of course, much lower than Wednesday's market, so a bit of a downside there. In terms of naira value, that was much better. However, that's 5.47 billion naira. That gives you about 15.2 million US dollars if you do the exchange conversion. What that gives you in dollar terms. In terms of deals, that was quite significant and on track, 5,110, because demand for Dangote cement was there. So that takes us to the 5 most covered, most actively traded subsectors. The banking sector made a very gentle comeback because Zenith Bank saw 2.27% on its share price. Consumer goods fell by almost 0.5%. Guinness Nigeria was massively sold down on Thursday, as well as Nigerian breweries. Then you find industrial goods make a comeback. Dangote Cement took the market to the cleaners, to the laundry on Monday, Tuesday, and Wednesday. And on Thursday, drove the market back again. And then the industrial goods was 1%, almost 1% better. Then insurance was much better than their bigger cousins, the banks, by 0.34%. Oil and gas was down 1.17%. Mobile was down. Wando fell on Thursday, as well as this very small cap oil retailer. One of them, but we'll get to that in a bit of a few minutes on the program. Look at the NESD of OTC market. There was also profit taking, a massive 2.11% down on the USI index. That's via the National Association of Securities Dealers OTC market. That's 2.11%. The index reading fell below the 600 psychological level. Market cap down to 404.15 billion, where the market finished off. And the volume was much lower, less than 50,000 units, 6.53 million naira in just 13 transactions. I take that away and look at the treasury bills market and the bond market, where you have what you call the fixed income. Part of the conversation with Obianiju Mustafa from Afrinvest in a couple of minutes. And this is the most actively traded treasuries for the fourth trading day of the week. Very quite active. 224 billion naira at the secondary window of the FMDQ OTC Securities Exchange, despite the massive primary market auction of treasury bills by the central bank. What was that? 99.51 billion was what the central bank rolled out yesterday in terms of two dated papers, 175-day and 364-day treasuries, despite the Thursday maturity and the repayment of matured treasury bills by the financial regulator, 168.04 billion, just a little bit of liquidity management. That's the summary for Thursday trading via the FMDQ in terms of treasury bills. I'll flip that and look at the bond market. Very interesting. Almost 10 billion in total transactions for yesterday, less than 100 transactions. But if you look at the most actively traded FGN papers, that was in the long end of the market, a little bit of sluggish market, but of course in terms of yields. But in terms of trading sentiment, that was really active. 18th April 2037 maturing paper. And the 2036, you can see that there. A short-term paper maturing 2020 and the midterm 2024. We're going to pile all of that into what Obianiju will talk about later on the program. Now we talk about the FX market, and there are words on the street. There is illiquidity in the market and the scarcity of foreign exchange. So take a quick look at the Thursday end of day Naira dollar, Naira pound, and Naira euro relationship. It was flat at the central bank reference spot FX. 305.65 interbank market, the autonomous foreign exchange market, as the NAFEX there, the Naira had a decent Thursday, and let's just go to the streets, and the Naira was 0.5% better on the dollar at 368, but lost 0.2% against the British pound. It was flat against the euro, 432. And the last market, the FMDQ investor and exporters window, the Naira finished off 361.17. down 0.41%. All of this will be part of the conversations when we come back after the break. You're watching Business Morning live here on Channels Television.